So first I'm going to do it on the weekly chart. Okay. This is okay. Let me remove this the daily part here. No problem. Okay. So weekly chart. So this is the weekly chart, and these are the weekly candles. So if you look into this, the last candle, this weekly candle, okay, it's a bull candle. So last four candles, I guess five candles. Let me see here. So these are last 1, 2, 3, 4, 5. Okay. So last five candles. So these last five candles are the bull candles. Okay. So well, as such, there was no problem up to this candle. Okay. But now this candle, it has created a problem. Now, and what is the problem? Okay. So if you see in here, uh, if you see this thing, okay, this is the Bollinger Band. This is the upper band of the Bollinger Band. Okay. And the upper band of the Bollinger Band is at 4638. 4638. Okay, that is close to 4635, the resistance I told you. Okay, last week. So this upper band is here at 4638, and it closed, and the market S&P 500, it closed at 4697. Okay, which is means so which simply means that it has disrespected the upper band of the Bollinger Band here on the weekly chart. And when the next week commences, okay, this Bollinger Band, okay, it will rise, or it will increase to 4660, approximately 4655 or 4660. So what is expected to happen as such? See, this is a bull candle, okay, and the interpretation of a bull candle is that whenever there is a bull candle, chances are that the next candle will be a bull candle, but that is not going to happen. The reason is, okay, means there are a lot of reasons, but one of the reason is this particular upper band of the Bollinger Band. So what is going to happen, that on Monday there are very fair chances market is going to come down. Okay, market is going to calm down, and it will come down to respect the Bollinger Band somewhere here, 4658, 4655, 4660 approximately. Okay, so it will hit this the Bollinger Band, and thereafter chances are that it will further come down to respect this, this support. So it was earlier the resistance 4635, but now it is going to act as support 4635. Okay, and if the market breaches this support, then market is going to hit the next one, which is 4572, which is 4572. So 4572, this is the resistance, and thereafter we have a strong confluence zone. Okay, and other than that, we have a trend line. Okay, that is waiting for the market. Anyways, when the market comes down, then we have the moving averages. Okay, and a lot of things. And if the market moves up, so there was this this strong resistance at 4690. So this was 469. Okay, so this was one of the reason why I bought puts. So I've shown you this 168%, okay, in a profit. So this was one of the reason, because as soon as the market hit 46 means market opened above 4690. Okay, it was 4700, I guess, and then it moved up to 4715 or 16. Okay, so that time, because this is my strong resistance, and market disrespected this resistance, so I was quite sure that market will come down. So I was almost 100% sure that market will come down, and this is the reason why I bought ports, and it gave me 168% profit. Okay, anyway, so this is the resistance. Then thereafter we have this final, okay, resistance at 4740. It is 4740. So these are the these are the support and resistances. So market is expected to move between the support and resistances, but anyways, I'm expecting the market to remain below 4690 next week. Okay, because it has already disrespected a lot of technical indicators. So it should means it will cool down. So yes, what may happen is that initially, like on Monday and Tuesday, okay, it may come down. Okay, and because there is already a bull trend, then once it comes down, and thereafter it may retrace, okay, in order to be in this the bull trend. Okay, or it may remain in this the consolidation zone for the next week. Okay, anyways, that will be more clear on the daily chart. Okay, now let's do the technical analysis here. Let me remove these drawings. So the technical analysis, okay, the first thing is, okay, first thing we have here is this the Bollinger Band. Okay, so if you see this, the Bollinger Band, sorry. Okay, so if you see this, the Bollinger Band, so market is above the Bollinger Band, means above the SMA of the Bollinger Band, and it has already crossed the Bollinger Band, so market is bullish, no doubt about that. But because the market has crossed the Bollinger Band, so it has to come down in order to respect the Bollinger Band and other technical indicators. Okay. Now the next part is the moving averages, because market is above the moving averages, market is trading above the moving averages, so it is bullish. Okay, it is clearly bullish. Then we have the Ichimoku. Market is trading well above the Ichimoku, so there is no concern here. Okay, from the Ichimoku part, market is bullish. Now if we look into other technical indicators, so here other technical indicators. So we have MACD. Okay, MACD is now bullish. Last week it was bearish. So I told you that in this week, means in the week of November 1st. Okay, it is expected to be bullish. So now MACD is bullish. Okay, and also if you see the histogram, it is green. So it is bullish. But that does not mean that that market is going to move up. So the next candle, okay, it may be bearish, or it may be a very small candle. Means if the market comes into consolidation, then it will be a very small candle. Anyways, it is bullish, marginally bullish MACD. Okay, stock RSI. Stock RSI is bullish. Stock RSI is bullish because K channel is 75, okay, and D channel is over 50. So K is over D, okay, and so it is bullish. Divergence, yep. So this was another reason why I bought the put, because the divergence, if you see this, if you see this particular divergence here, okay, this is approximately, I mean, this is more than 70, this is more than 70, and this is the reason why I was again very much sure the market is going to come down after hitting 4,715 or 4,717. Okay, because divergence was historically high, and this is why I'm saying that there are very, very heavy chances market is expected to come down. Okay, so divergence was one thing. Then momentum. Okay, momentum is building up, and momentum is in favor of bulls. Okay, so momentum is in favor of bulls, which means, so all of these technical indicators on the weekly chart are supporting the bull trend. Okay, so on the weekly chart, it's a bull trend, but there is a problem with this bull trend that I have told you. Now let's move on to the daily chart, and let's see what is exactly going to happen. Okay, we are here on the daily chart. So if you look into this the daily chart, so what do you see? Okay, this is what everyone was waiting for. Okay, or this is what we say, means that traders, okay, who use the technicals, they wish for this kind of formations, they wish for this kind of candles. See, the interpretation of this candle is it's a doji candle. Number one, it's a doji candle, DOJI. Okay, it's a doji candle. So interpretation of a doji candle is that doji means that the market is indecisive. Market is indecisive here. Whenever this candle is formed, which means the market is indecisive. Okay, so bulls and bears, so nobody is sure like what to do at this moment, whether to move up or whether to come down. The reason is that market has already for last many days, okay, market is moving sharply up, sharply up. So now there is a fear in the market that because market has moved a lot and there is very heavy divergence on the weekly and on the daily chart, so market may come down at any moment. Okay, now in case of bulls, okay, bulls means the people who still believe that market is going to move up, so they want to buy. But the problem is that there are very less sellers. Okay, so now because now after the formation of this the doji candle, now there are less sellers because nobody want to take that much of risk. Because if market comes down, then let me show you the power of the market. So when this market comes down, then what it may do. Okay, so if you see, okay, generally at this moment whenever market comes down, then we see very, very heavy formations of the bear candle, very heavy formation. And this type of formations, okay, if you have seen my last videos, particularly of September, last September, okay, September 30th, then I have shown you that on this particular day, and on this particular day, okay, S&P 500, it has given 1000% profit, 1000%. Okay, so on means within 1 hour, and that profit was within 1 hour. This is the one day chart, but that profit was like 1000% or 1400% profit was achieved within 1 hour. So this is the power of the market. So this is means, look, this may happen, and when this happen, then all of the gains that market made here, or that market achieved here in last all of these days, okay, like a single candle is enough to negate all of these gains of the bulls that they made. And in this case, the profit, okay, it will be 1000% to 2000% within a day, okay, particularly on the expiry day. So market has already shown us profit up to 1400%, 1500%. Okay. So it's not a big deal, achieving 2000% within a day, provided that there is a good fall in the market. Anyways, so this was the interpretation of this candle. So now let's do the technical analysis here. Okay, so I am now, okay, yep. So when I went for the put, so this was again the reason that on the daily chart, okay, there was very heavy divergence on the daily chart. It was above 71. Okay, so that was again, that was the reason, and why I went for the puts. Okay, now the technical analysis. If you see the Bollinger Band, so market is moving on the daily basis. This is the daily chart. This is the daily chart. On the daily basis, market is moving above the SMA of the Bollinger Band. It is bullish, but it is still below the upper band of the Bollinger Band. Okay, but that's not a concern, because it is still bullish. The moving averages, there is a clear fan out. There is a clear fan out, which means the market is bullish. And if you see the Ichimoku, so Ichimoku is nowhere to be seen in the picture. Okay, so yeah, it is here around 4,400. It's still at 4,400 when market is hovering around 4,700. Okay, so it is still bullish. Now if we look into the other aspects, the other technical indicators. Okay, so if you see MACD is heavily bullish. MACD is heavily bullish. Stock RSI is 100%. Stock RSI is 100%. Stock RSI is heavily bullish. Divergence. Okay, now this was the reason why, rather than being bullish, okay, whether rather than being means I did not bought the calls, but I went for the puts, because divergence, now you are seeing it is 70.60, 70.60, but when it reached this point, the divergence was 71.50. So when I saw the divergence hitting 71, crossing 71, okay, I went for the puts. Okay, now RSI. So RSI is very high. RSI is close to 100. It is 97. So momentum is very high. All of the technical indicators on the daily chart are saying that the market is bullish. So there is no doubt here that the market is bullish. But the problem is the divergence, okay, and our resistance, and the Bollinger Band on the weekly chart. So these are the three reasons why I am betting on this, that the market will fall, and market should fall. Okay, now what is expected to happen on Monday? Okay, so on Monday, okay, market will fall. Monday the market will fall. Okay, okay, let me remove this symbol. So on Monday market will fall. Okay, most likely it will fall, because the reason is okay. Yep. So there are two scenarios that may happen. One is when the market opens, it came down immediately. Means the open will be the high. Okay, this will be number one. Okay, this number one scenario. Number two scenario is that when this market opens, it may try to move a bit. Okay, but when it try to move a bit, the divergence will cross 71 or 72%, and then when it moves up, then thereafter shortly, maybe 30 minutes, 15 minutes, maybe 1 hour, it will again come down. Okay, so if you see this particular candle, this red candle, okay, so something like this, this is the second scenario. Okay, so on this particular day, on October 26th, okay, this candle was formed, and then October 27th, market moved up a bit and then came down heavily. Okay, so this is the second scenario. So these are the two scenarios that are expected to happen. Okay, the third one is that after coming down, okay, after hitting all of these supports, and if it crosses, means it is expected to hit this particular support, and this moving average, okay, this moving average is most likely to reach somewhere here. So it is expected to hit this particular moving average. When it hit this particular moving average, then it may hold and then it may retrace. Okay, so it needs something sustainable in order to retrace. Without anything sustainable, it will not retrace. Okay, so this is most likely to happen. So my advice is that avoid why that you should avoid buying on dips, okay, in this week. So avoid buying in this particular week. Okay, avoid buying this week because it is very high. Okay, and now you can buy only if, see, you can buy only if market comes down. Okay, market holds up, and this the divergence that we have seen, and the divergence, okay, it comes down. When the divergence comes down, okay, and then when you see that market is retracing, that is the point. Now at this point, okay, you can buy. If you want to buy, then this will be the point, okay, you can actually buy. So when it comes down, it holds, okay, and when it retraces, then only you should buy. Okay, otherwise uh, the market is expected to come down. Okay, fair enough. So we have discussed these support and resistances. So just look into this one, 4690. Okay, 4690, we have this. Then we have 4635, 4635. Okay, thereafter we have 4575, 4575. Okay, so these are the supports, and I'm not counting the resistance, as I'm not expecting it to move any further. Okay, so just be careful here. Okay, and trade wisely. So guys, this was my technical analysis. Okay, and I have shared the link to my Discord group. Okay, there is this Google spreadsheet. Okay, it is open, means it is publicly open, so you can look into the Discord. So I am offering 10%, 30% returns, and so you can look into it. And also there are some terms and condition and some previous trades, okay, that I've shared. And I have also shared my email address in the description, and okay, and so you can also contact me if you want to ask any more questions. Also guys, if you should you wish to participate in my stock market programs, stock market options trading programs, options trading profit strategies programs, then I have also given the links to these programs in the description of the video. You can take a look.